Hi, everybody. Jeffrey Dunn here with Safe Option Strategies. Welcome to the Moving Markets Podcast. It is the 16th of February, 2024. Glad to have you here on a Friday. The week is officially wrapped up and over. It ended kind of on the note we suspected. We didn't call every single day this week right, but we got a couple of them exactly on the money, and things did end a little bit to the downside. Not a horrible sell-off today, but the PPI data showed about the same thing that the CPI data showed earlier in the week, and it's not a pretty picture. Inflation has reared its head up just a little bit. It's at least kind of poking back out of the hole a little bit, and that could spell trouble if those numbers continue to trend in that direction. Not a real long podcast today because we've talked about kind of everything that we need to talk about this week. There won't be a podcast on Monday because it is the President's Day holiday, and markets are closed, so we're taking the day off as well. So enjoy a nice long weekend. As always, like us or give us a thumbs up, whatever platform you're on. Make sure you subscribe to our YouTube channel and get updates as we send them out. And have a great President's Day weekend. Thanks. The week finished kind of the way, maybe not exactly, but kind of the way I expected it to finish. When we started this week and had the big move down Monday and Tuesday, most of it on Tuesday, we got some nice rebound on Thursday and Friday, but with today's move down, we did finish just slightly on a bearish week. Not by very much. It wasn't like a horrific bearish week. It wasn't something that is all crazy and wild, and we're not quite in a situation where we want to start screaming doom and gloom. I've talked to a lot of people. I've traded text messages, emails with a lot of people who believe that we are kind of sitting on a precipice here, maybe ready to fall off a little bit. Pullback on the S&P back to 4,800, maybe even back to 4,700. I think would be a good thing in many ways. I think, if you've got a 5% pullback, that would bring you down to about, a 10% would bring you down to about here. And that is a technical correction. So even back down to 4,500 in what would be called, a technical correction would not be a bad thing. In fact, that would be kind of a good thing. And I think we might start moving into that in the second quarter of this year. I think, the PPI report more than anything else, the combination of the CPI and the PPI report today, and rightfully so. It's, this situation with the CPI and the PPI, we've talked about them enough. I'm not going to go into it in a ton more detail. I'll show you the report and show you the numbers. But the concern is, we had all this time through 2022 that inflation was going like this, right up to the middle part of 2023, and then things started to come down. The mainstream press would have you believe that inflation was coming back this way, and that somehow we're almost back down to where prices were 2.5 years ago. And I've told you on many occasions that is simply not the case. That's simply not true. And it's a very wrong way to look at it, and a very misleading way to look at it. The accurate way to look at it is we had inflation going up like this for the first year and a half this administration was in office, and just accelerating. Then inflation started to taper off a little bit and sort of flattened a little bit and wasn't going up as high, but it was still going up. 2 years later, the difference from where we're 3 years later, the difference from where we were 3 years ago and where we're at right now is still increasing. Now you've got maybe this little bit of reacceleration. I'm kind of exaggerating with the line that I'm drawing, but you've got this little bit of reacceleration. So far, it's not a lot. It's not something that we should get really freaked out about or really concerned about. But things are reaccelerating, and that was the cause of the Dow, the NASDAQ, and the S&P all being down today. We talked a lot about it, and I, twice this week I got to give myself a little bit of pat on the back. I got to do that on Wednesday morning. I get to do it this morning. Because on Wednesday morning, I was pretty correct in what I said would probably happen if the CPI numbers came in just a little bit higher than what was expected. And I told you yesterday that if the PPI numbers did the same thing and came in a little bit higher than expected, we would get a sell-off, but it wouldn't be anything like the sell-off on Tuesday. I believe Tuesday was an overreaction, not an inappropriate reaction in the sense that people were selling off, but an overreaction in terms of how much they were selling off. And so that I think is where we find ourselves at the end of the week, is with about the type of sell-off I thought we would have today. Definitely things were under pressure. A couple of times during the day, the S&P was up a little bit, and then in the latter part of the day, it turned and had a pretty good downward trend down to 0.5% to the downside. Percentage-wise, it was down a little bit more than the Dow today, but PPI was the culprit for sure. And here's those PPI numbers. The previous month, the number was a -1. I was a little bit surprised by this, and I'm going to tell you right now, I am still a little bit suspicious of that. The consensus is that it would move back in the other direction just a tick to be 0.1, and instead it was 0.3. So that's a pretty good size miss. I was equally the year over year PPI, came in at 1, and that was a little bit better than was expected. People thought it was going to come down. It actually was up a little bit higher. It didn't go up from the prior month, but it was up higher than the expectation. And then without food and energy, the year over year and the month over month, definitely both quite a bit higher than what the expectation was. This 0.1 ended up coming in at 0.5. The 1.7 ended up coming in at 2. And then you can see, this number for minus trade services as well. They have another category now. They're taking out trade services. And in that category, the year over year moved up again as well. So these are not inconsequential misses, and they are without a doubt the reason the markets did what they did today. So it's shouldn't be a shock to anybody. It shouldn't be upsetting to anyone. I think a correction is in the cards for the next couple of months. I'm going to be very cautious in any new trades that I put on, in the sense of making certain that they are hedged very well, that they are non-directional. We've got next week. It's interesting with the holiday. I believe Wednesday, it's either Tuesday afternoon or Wednesday morning. I think Tuesday afternoon. Walmart and Home Depot are both going to report their earnings next week. Actually, it's Tuesday morning, so we're not going to have the benefit of the market trading in advance of the Home Depot report and the Walmart report on Tuesday morning. So it'll be interesting to see what those do. And a few more companies that are kind of technically now past earnings season, but Walmart and Home Depot are big enough companies. I think their report should be considered the end of earnings season before we get into the next one in a couple months. But that's all I've got for today. Have a great weekend. The week ended kind of the way I expected it to. Nothing big right there. Next week will be a holiday shortened week. Remember, we're not going to do a podcast on Monday. We will not do a newsletter on Monday. All of the normal Monday stuff will take place on Tuesday after the market closes. So in the meantime, even if you're not in this country and you don't celebrate, I certainly wouldn't expect you to celebrate President's Day if you live outside the U.S. But for those of you in other countries, just enjoy the extra day away from the market, relax a little bit, have a good weekend, and we'll see you back here on Tuesday of next week. Thanks. Bye-bye. Got people definitely a little bit concerned